Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended October 15th, 2016. Indian gold buying comes to life. Indian gold buying picks up in advance of the festival season. The U.S. dollar index is soaring. Trump delivers because you'd be in jail line at the debate with Hillary Clinton. And WikiLeaks dumps damaging emails on Hillary Clinton while mainstream press largely ignores them. Press focuses instead on Trump groping allegations. Before we get started, during the week I did not produce one blog post. I had lots of things to do, including reviewing the WikiLeaks and the reaction of the press, social media, regarding the presidential campaign and the information that was in those leaks. And what the observation that I have, and this does tie into gold and silver. It's not just a political sidetrack that I'm going to go off on here. But from reading and going through the WikiLeaks and seeing not only what was in them and the reaction to them, one thing is clear, that the free press in the U.S. is now very, very expensive. Journalism no longer pays because the rise of the internet. You've got people used to pay and buy newspapers because they wanted to get the news, and the quality journalism was why people paid for newspapers. They expected these people, they would go out and find stories, they would write interesting stories. But today it no longer pays to be an operator of a news outlet. These newspapers lose money, so they now rely on paid corporate sponsors, not reader demand, and they rely on wealthy owners who own them not because they make money as a side investment. They're not buying newspapers like Carlos Slim investing in the New York Times or Jeff Bezos. They're buying them so they have a platform to disseminate their own agenda. So the journalists no longer have an interest. They know where their bread is buttered. They're not out trying to impress the readers with their stories. They're trying to impress their owners and their corporate sponsors, and they will either not print stories that are damaging to their corporate sponsors, or they will write what their corporate sponsors tell them. But in the case of the WikiLeaks, it gets even more fascinating, is a lot of the WikiLeaks show the coordination of what I'm talking about between the press and the Democratic National Committee and the Clinton campaigns. So it's very difficult for them to report on things that implicate them directly. So what do? They largely ignore it. And since it's obvious that they want Hillary Clinton to win, they can't report on that news, what's going on with all the leaks. They have to report on something else. So they report on allegations that Donald Trump was groping some woman on an airplane 35 years ago. That is not a story that people really are hankering to hear with all the issues going on in the campaign, in the country, with the economy. But that's what the mainstream media decides they need to put out there in order to support the Hillary Clinton candidacy. Again, Bill Clinton, he's on the campaign trail. He says that he understands the Trump supporters. I used to be one. He says that basically Trump supporters, their base, are rednecks. And of course, protesters call him a rapist. So you see the level that we've got to. Now, what this all means is you now have a system where it's all about buying access, creating access. It used to be senators were rich before they went into the Congress or the Senate. And the reason they wanted these people to be patrician and rich was so they'd be above the fray, so that they wouldn't be bribed as easily. And then the Congress was supposed to be people that represented the kind of changing will of the people, so they would change more often. That's why the Congress have a 2-year term and the Senator have a 6-year term. What has turned out, though, is that the congressmen are there just as long as the senators. They don't change. They're there year after year after year, and so are the congressmen. And then they get rich by being congressmen and senators. So you don't have to be rich to be a senator. You just have to have backers, and then they put you in and you stay there and you get rich. And a big story, and no one talks about it, is how the Clintons somehow have $160 million just from being in public service. Well, they give speeches. One of those speeches, who do they give speeches to? Not people who are interested in listening to policy and what it was like to be president and how a bill becomes a law. No, they're interested in buying access. And we saw in the WikiLeaks the Qatar and Saudi Arabia donating massive amounts of money to the Clinton Foundation. So in any event, what this shows, and this is how we get it back to gold and silver, I put out a tweet after kind of absorbing all this information. There's a lot of people out there that say, oh, gold and silver, they're not rigged. That's just a conspiracy theory. Well, after seeing these WikiLeaks and evidence of a massive political system rigging, I would be shocked if they didn't rig the gold and silver prices. Because after all, gold and silver are competition for fiat currencies. If you're going to have a fiat currency system, you've got to have confidence that the paper is good, because the paper in and of itself is nothing. It's just a bunch of words and numbers written on it and some colors on it. For people to think that that's worth money, there has to be confidence that it is part of a system that is trustworthy, honest, productive. And therefore, in order to maintain that confidence, not only does the political system and the economic system have to be strong, but that gold and silver have to be viewed as not really viable alternatives. Well, when you see the manipulation that they do in the political system, in the economic system, it's obvious that they're trying to boost up the system in order to maintain that confidence. However, their activities that are being exposed have the exact opposite effect and undermine the system. So if central banking didn't have employment, economic mandates, which has led them to, that's their kind of mandate that they're supposed to be in charge of the economy. Well, if they weren't in charge of the economy and all they were there to do was provide backup to banks in case they failed, then the central bank would kind of be in the background. They wouldn't be giving speeches every day about raising rates, not raising rates, where the economy is. They would just sit in the background and they would serve the purpose as a bank that is a bank of last resort. Again, that's how a fiat system works. Fine. But they've gone much beyond that. So when they have this mandate that they're going to create employment, they're going to grow the economy, that's when they start doing things like lowering rates, negative interest rates, cashless society, stimulus, printing money, buying bonds, buying shares. Well, if they're going to do all that nonsense, they also then have to act like it works. So they have to get out there and they don't have to talk about it. But again, they have to manipulate gold and silver lower. They have to also make sure that the data doesn't contradict what they're doing, because they're basically saying, look, trust us, we're going to print money and it's going to fix everything. Trust us, we're going to buy bonds and it's going to fix everything. Trust us, you're going to get a job because we now have zero interest rates. So they all have, any of these systems have a vested interest. If they're going to, basically, if you're going to lower interest, you're going to rig interest rates, you have an interest in rigging everything else to make sure that your initial rigging works. You can't lower interest rates and say this is going to fix everything and then gold and silver take off and the economy crashes. No, they have to rig everything to make it look like their rigging works. So the more they rig, the more they have to rig. Okay, let's get to the gold and silver stories of the week. Remember, if you're not a Smaulgld subscriber, please become one. You never know when you or I or we get kicked off of Twitter, we get kicked off of YouTube. At least if you're a Smaulgld subscriber, you have an email. We can correspond with others, and we're not subject to these media platforms, which again are part and parcel of the mainstream media. And the way you subscribe to Smaulgld is you just go up here, you fill in your email address, and when you do that, you will get a report, 12 ways gold is different than silver, and it's an interesting report I've put out, and you can then make your own determination as to whether you think gold or silver, the gold-silver ratio is where it is and where it should be and where it might be going. Okay. Gold called last week at 12.50. Remember, it had taken, it was down about $7, but it had taken a massive dive. during the Chinese holiday week that we reported on in last week's report. But gold kind of held its own. Silver also kind of held its own, but there was an anticipated rebound once the Shanghai Gold Exchange reopened this week that gold and silver would rise, but they basically went up and down all week. The gold silver ratio ended the week at 71.95, up slightly because gold was flat and silver was down. Now, if you're interested in the gold silver ratio, it's something I talk about a lot. I don't place a lot of credibility in it, but if you click on this link here, you can go and see all the gold silver charts over the last 10 years. There's a live daily chart, there's a 1 month, there's a 5 year, there's a 10 year, and there's some information on the gold silver ratio. All right, so here are the stories. If you're interested in cashless society, this guy Rogoff, who not only has been writing about cashless society and advocating it, has now written a book about it. Now, I'm not going to read it. I don't even suggest might want to read the article, but I doubt you'd want to read the book. If you're interested in the cashless society, I've done a whole series and I'm not done with it yet. But you can start here, the dark side of a cashless society. I go through some of the downsides of a cashless society. The most recent installment in that dark side of the cashless society was how we got here. It went through the long history of government actions that have led us to where we are today. The next installment will deal with technology and culture. Again, if you sign up for smaulgld.com, that will be one that will definitely be emailed to you. I do not email each and every blog post that I write, and I will be writing more next week, and I'll be covering more news stories, but I'm not going to be sending them out, so your inbox won't be inundated with Smaulgld emails. But I will, whatever I email, I will put in the week in review. So if you don't have time to follow Smaulgld every day, you can catch up at the end of the week through this podcast and also on the blog post where all the links are. By the way, with respect to links, I'm going to stop linking to New York Times, CNN, Washington Post, and other offenders that do not report on news, but only report on what they're told to report on. So if there's a story in any of those news, Reuters, AP, I'll just report what they said, but I'm not going to provide a link. There's no point in sending them traffic. There's no point in sending them ad dollars. There's really no point in mentioning anything other than they reported on something. There's no need to give them a link. They don't link to my story, so why should I link to their stories? Gold, Ron Paul, if you're interested, if you remember old Ron Paul, Congressman Ron Paul, who led the Ed the Fed campaign back about 2, 3, 4, 5 years ago, he thinks gold will go up. That's not really news, but it's interesting to see him. I mean, it's not news that he thinks that because he's always thought that. Now, India, we mentioned this. That's the top story that we're supposed to be talking about today. India, last year, had massive gold imports despite the fact that at the end of 2013, they instituted a 10% import duty. Gold in India is, I think it's estimated 20,000 tons are held by India. What is 20,000 tons? Well, supposedly the United States and its massive gold hoard at Fort Knox and West Point and other places, Denver Mint, it supposedly has 8,100 tons. So assume the United States has all the gold, and that's the largest amount that any central bank has. Indian households, mom and pops across rural India, farmers, supposedly own 20,000 tons. So they have a history of gold. They love gold. They've had massive imports. There's no gold mines in India. None. There's one, but it doesn't really work. It was shut down in 1945. They're trying to start it up again. So they rely on imports and smuggling. Well, Indian gold imports this year are down 50-60% because the price is higher. Remember, if you're a poor Indian farmer, you're not like a stock jockey in the U.S. You see something going up, you buy it. You see something going up, you hope it goes down if you want to buy it. Well, that's normal supply and demand. The Western concept of chasing assets higher is insanity. So, Indians have not been buying gold this year, not been importing gold this year. I don't mean not buying, they're not buying at the same levels. Well, Diwali is a festive season where they give gold a holiday in India, and the two things that determine how much gold Indians are going to buy are how much money they have, and how much money they have is based on whether there's been a rainy season, a good monsoon, so their crops grow, and two, what the price of gold is. Well, this year they got lucky. They had a great season. I think it was the best in 8, 9, 10 years. Rainy season, so the crops are good, so they got some extra rupees lying around. And they got this gift last week. The price of gold went down $75, $80. So now they're saying that the Indian gold demand is finally going to pick up after it being massively down from January to September. Now, it probably won't be enough to boost the entire year gold purchases in India, but it will be a short-term blip or a short-term boost to gold purchasing. Fed chatter, we cover this every week. As we talked about at the top of this show, Chicago Fed president. Now he's saying no urgency to raise hike, but December could be appropriate because the job report was pretty good. No, it wasn't. You see, even when they try to act dovish, what they're trying to do is they're trying to regain their credibility and say, look, we've always said we're going to raise rates. And if they have to raise rates in December, they will. I said they would last year, and they did. Jim Rickers, a lot of other people, oh, no, they can never. Peter Schiff, they can never. And then they backpedal and say, oh, I didn't mean that. What I meant, well, it doesn't mean anything. It was only one rate hike. The next move is going to be down. No, they'll raise it again. But they're never going to normalize rates, but they'll raise them a quarter point if their credibility is on the line. Now, one reason they might not raise rates, because this ties into another one of my theories on what the Fed does. If the dollar index is over 100 at the end of December, then they won't raise rates. They don't. What they're trying to do is keep the dollar in a range. They don't want the dollar to get out of hand and go up too high. But if their credibility is on the line and they don't have an excuse not to raise rates by December, so what? They'll raise rates a quarter point. Now, all of the data that's coming out, when they try to say, this is an exact point, that the job report was good, when Cleveland Fed President Meister still thinks we're going to have 3.5% growth in the third quarter. The third quarter is over. There's no way it was 3.5%. It was probably under 2%. But they say these things because they have to. They can't say, we're going to raise rates because the economy is decelerating. They're saying we have to raise rates because we're concerned that it's overheating. That's nonsense. Okay, so now there were many stories during the week, and that's why I entitled the podcast about Indian gold demand. Indian jewelry stocks shine in hopes of festive gold demand. Mentioned here, Indian gold imports declined 59% January to September. That's massive. That's a very big drop. There's other stories here. We won't go through them. Gold is Uganda's second largest imports. Greek gold from Russia at the Acropolis museums. I select these stories because I think they're interesting. They're worthy of clicking on. As I said, I'm not going to be putting in the Reuters and the AP and the CNN and the New York Times and Washington Post stories, but if I put a post in here, a link in here from now on, I deem it worthy to take a look. So here's gold buying headed for best Diwali in 4 years. Here's why. That's just some of the reasons that we mentioned about the rainy season and the lower prices. Now, the Deutsche Bank, we covered this when the Deutsche Bank settled their gold pricing and silver pricing manipulation case earlier this year. They settled and they said they were going to help work with the investigators with the other bullion banks that were named. Now, HSBC, I think, was one that got off, and they're not going to pursue them. But Scotiabank and a few others are still being sued in this case, and there was some update during the week on what's going on with the case. There's nothing dispositive yet, but we'll follow that case and we'll see if we actually get a determination that there was actual gold and silver manipulation by these bullion banks. Now, not finding as a legal matter whether there's manipulation doesn't mean there's not manipulation. It just means they couldn't make a case. They couldn't make an action. It goes right back to what Comey said. He laid out the case against Hillary Clinton. Then he said, well, yeah, but I'm not going to bring a case. No reasonable prosecutor would bring a case. And that highlights when you're in a rigged system, it doesn't matter what the conclusion is. It matters who's making the conclusion or what they're going to do about it. So in these court cases, it doesn't even have to be a crooked judge. He just decides there's just not enough evidence here that if these banks are stupid enough to naked short silver and gold and lose a lot of money, that's not evidence of anything other than they're stupid. And we're not going to look back and say, we're not going to run your business for you because it's a free country. You want to lose money? Have at it. And that's really how they've gotten out of these manipulation cases in the past, is that money trading losses are not evidence of anything. You can infer, but look, if somebody is losing money, they're losing money. And under free market principles, you say, well, eventually they'll go out of business. Now we know that's not true. They won't go out of business. They can always get more money. In any event, okay. Now the U.S. Mint mid-month update, we're seeing a big surge in gold and, to a lesser extent, silver sales. So the silver sales are over. American Silver Eagles are over 2.1 million this month. That's the largest since we've had since June. July, August, and September are all in the 1 million range. We're now halfway through the month at 2.1. Gold sales, American Gold Eagles 1 ounce coins are over 57,000, which is heading towards the largest month of sales month of the year. And even the American Gold Buffalo, I think, is at 12,000 so far. So we're not going to go through them all. You can see day by day as we go through the blog post how many were sold each day. The American Gold Eagles are on pace for the best year since 2012-13. The American Silver Eagles, though, even though they're having a good October, even if they have a really good November, December, they won't, most likely won't even crack 40 million and last year ounces. And last year they hit 47 million, which was a record. And the year before that they had 44 million 6,000, which was a record too, until 2015 came along and they broke that record. Again, if you're interested in gold, silver coinage, you can support Smaulgld by clicking on any of the affiliate links and buying your gold and silver coins through Smaulgld. It is not a recommendation that you buy gold and silver or buy these particular coins, but if you do, I'll get a small commission. That's the upfront disclosure, and that does help keep Smaulgld going. I don't even really take donations. I do have a donation button way at the bottom. I've never highlighted it. So the site is not funded in any way, shape, or form by subscriptions. It's funded solely by your patronage of purchasing gold and silver through the site and or supporting the advertisers. We do have an Amazon link if you're interested. You can click there and buy your stuff through Amazon, and I get a small commission there as well. All right, let's keep going with, I think, yes, okay. The India and gold. India introduced a new government branded as a gold coin, and the World Gold Council thinks they're a good idea. Indians think they're a good idea. I think it's a good idea. I think it's better than the Indian government's gold monetization scheme. They're trying to get people to turn in their gold in exchange for these gold bonds where you get rupees for lending them your gold. I think if the government wants to sell gold to its people, that's a far better thing to do than to try to take it from them and give them a bond. Gold glitters on global cues, jewelers buying. This is from the Economic Times of India. They're noting that the gold sales are increasing in India this time of the year, and that now gold prices in India, which it had been at a discount to the spot price, the Western spot price, because there was less demand, are now trading at close to spot and or at a premium. This is just a funny one here. There's a guy, his name, I think he's from Israel. His name is Dori Gold. Now, if any of you know, that's a double gold name, because the Dori are the bars that are the gold, silver bars, and then gold is gold. So if your name is Dori Gold, you're a golden guy. Yeah, rural India makes most of silver's drop. Silver's in the same position as gold. Last year, silver was just incredible demand. I think Wealth Watchman had done a very nice report on silver demand last year, showing how it was off the charts. You can check out that on his YouTube channel. But this year, silver demand has been as atrocious as gold demand, again, because the price rose. Demand, it says in the first 10 months of the year, demand for silver was down, and now, at least starting this month, it's now 50% higher over the same period through last year. Platinum, they say it's in a bear market as rates, electric car dent outlook. Now, I don't know if that's true, because I just read yesterday that sales in September were the highest car sale ever. Now, of course, that's not forward looking, but Chinese are still buying massive cars. These little Tesla government subsidized $150,000 cars, to me, are absolutely no threat to cars that are currently produced running on fossil fuels. People need to understand that electric cars run on electricity, and a good portion of electricity is coal. And also, these electric cars run on batteries, which come from lithium, which is a very rare commodity. So, I don't think, under the way they're currently run, the way they're currently manufactured, that there's a real opportunity to make tens and hundreds of millions of these battery operated cars the way they make them now. Now, platinum is used in the car we know today, the combustion engine, is in part of the catalytic converter, but they use small amounts of it, and the rest of platinum is basically for adornment and jewelry. It used to be Japanese loved it, now Chinese love it, but they're claiming that it's in a bear market. It isn't a bear market. It went down $200 in the last month and a half. If you're interested in platinum, we have on the site some information on platinum, on the gold platinum ratio, and then also if you click there, you can get that story. You can get gold versus platinum on the prices, and right now gold is trading at a premium to platinum. It's normally platinum trades at a premium to gold. And also, if you click on that link, you will find an entire platinum gold supply and demand analysis. Okay, let's get back to where we were. Oh, we missed this story, Morgan silver dollars. It's an interesting story about Morgan silver dollars, how much silver is in them. It says more than just silver. More Fed chatter. Dudley, Fed could be gentle in hiking rates, but he's still not saying we're not going to raise rates. They'll never come out and say they're not going to raise rates. They have to say there's always a possibility, next month, next week, live meeting on the table. They need to maintain their credibility and relevance. Again, not realizing that the more they yak, these yak attacks about raising rates, and the more they don't do it, they lose credibility. However, one interest rate in December, and then coupled with, oh, in 2017 we're going to raise them 3 or 4 times, just like they did at the end of 2015, and they regained some of their credibility. Okay, more Fed chatter. Harker is another Fed president. I'm not going to go. I can't go through what every one of these guys say. They all say the same thing: that the economy is growing. We're going to raise rates, but we really don't need to raise rates right now. But we should raise rates. It's never a definitive statement. It's designed to keep you thinking, I have to pay attention to what the Fed is saying. And the more you pay attention to them, the less you hear. And then you think, well, I better keep listening because maybe one day they're going to say something that matters. So far, it hasn't happened. No news here. China is the world's largest gold producer, as according to the World Gold Council in 2015. We'd already reported on that. China produced 460 tons of gold just in 2015. So for those of you saying, China's lying, they have far more gold than they say they have. You're right, but all China is saying is what the People's Bank of China has. They're not saying China in general. The People's Bank of China has only 1,840 tons, and that seems ludicrous given the amount of gold they produce every year. They'd make that up in 3 or 4 years, the 1,800 tons. And the amount of gold that's imported into China is clearly more than 1,800 tons over the past few years. It's just not on the People's Bank of China's balance sheet. It's elsewhere. It's at other banks owned by the people or controlled by People's Bank of China or the Chinese government. And it's in investment funds and it's in individuals' hands. And the Chinese government is admitted as such. So it's kind of a tempest in a teapot for people getting all excited and doing investigative work about where's China's gold. I did a report on it called The Case of China's Missing Gold, laid out where most of the gold probably is. It's just not at the central bank. It doesn't have to be. It's elsewhere. And I concluded in that story, they can roll it all up if they want to and put it in the central bank. What would be the point? But if they had to, they could. They didn't need to. They got into the SDR, if that was a big accomplishment, that last year, and they just got formally admitted October 1st on the basis of what they had. Look, England has very little gold and they're in the SDR. So there's no reason they had to put all their cards on the table and roll up all their gold in the country and put it in the People's Bank of China. It's better off being diversified and elsewhere. Economic data. Here's one interesting. The University of Michigan, the consumer confidence has been very high the last few years, but last few months, or actually the last few years, but it dropped in September, and they blamed the election. I don't know if that's what it is, but maybe consumers are worried about the election. The U.S. deficit rose 34% in 2015 to 587 billion. You throw in the Medicare, Medicaid, Social Security, it's well over $1 trillion. That's just a year that the United States has to spend just to operate itself. People have forgotten about the deficit. Deficit still matters, what Cheney said. Deficits were in vogue in 2009, 2010. And then because the stock market went up, everyone thinks that the deficits don't matter anymore. The debt to GDP will probably hit over 100%. And that does not seem to be an issue. I mean, it is an issue, but it doesn't seem to be something people are talking about, something people are worried about. More Fed chatter. This guy Rosengren, I think he's a Boston Fed president. We may have to raise rates faster than market forecast. Yeah, like faster than you did this year when you predicted we needed 4. You haven't done 1 this year, but they may raise faster than market's forecast. December may be appropriate. Atlanta Fed keeps throwing in the towel on their GDP estimate for the third quarter. They were at the beginning of back in July and August saying the third quarter is going to be close to 4%, 3.8%, and now they're saying it's going to be 1.9%. Yellen gave a speech. I have linked to it here. It's called The Elusive Great Recovery. Guess why? It's because of what the central banks are doing. It's not worth a read. The link is there if you're so inclined to read it. It's probably less boring than listening to her give it, but I produce it. I present it there for your reading if you so choose to take a look. Thank you very much for listening. And again, this week we will have more news stories, so please check out smaulgld.com. Please subscribe to this YouTube channel. Also, follow us on Twitter. Thank you.